Good morning. Welcome to Forex In Four. Today is Tuesday, November 15th, 2011. Alrighty, starting out here with the euro again, and we've got some, as you can see here, we're in a nice little downtrend happening here on the 1 hour chart. Looked like maybe we were going to get a little bit of support here yesterday from this area, but that didn't happen. You can see it almost looks like a little bit of a head and shoulders pattern. Not really. I mean, you want to see the shoulders up a little bit higher typically, but when you talk about the neckline, you can usually measure the distance between the neck to the top and then add that, and that's the amount of the loss. So potentially we're looking at, if this were a true head and shoulders pattern, perhaps a pullback to the 134 area, which if we look at this on the daily chart, seems to make a little bit of sense. It's not that far out of a range. We were there just recently, and what's going on in Europe that's causing this all to happen? Well, let's talk about the bond yields. That's the first order of business. All right, yesterday, Italy had their auction. Okay, they got their bonds off. Okay, but the yields were the highest that they'd seen in nearly 10 years. Well, this morning, Spain had their bond offering, and they didn't get off as much as they were looking to. All right, they were. I'm trying to get the number here. They wanted to get off 3.5 billion euros of 12 and 18th month bills. They only got 3.16. Yields were higher, up to 5% from 3.5% from the previous month. So yields are rising there. We've got this Italy 10-year back up over 7%. All right, and that's that magic number that we talked about that started selling last week. So things just aren't peachy keen, obviously, in Europe, and it looks like the bond vigilantes are really pushing for some sort of action. Just to give you some other news on basically on the fundamental side, is that a bright spot is that German GDP came in just slightly better than expected, 2.5% versus 2.4%, and then I think it was French GDP came in as expected as well. So those were the good signs for Europe. The bad signs is the German ZEW economic surveys at 3-year lows. All right, so those numbers all missed the mark, and they came in lower than expected, and that's something that's concerning over there in Europe. But obviously we know what the problem is. We know the problem is rising yields. We know the problem is the debt crisis. What are they going to do about it? Well, everyone's calling now for the ECB to just say, listen, we're the buyer of last resort, and that's it. To stabilize the situation. But we know about the political infighting that takes place, that who's going to be left holding the bag over there. It's still not a great process, and this deal that they came up with, it's not being enacted fast enough. So that's what we're looking at with the euro. Just want to show you the pound here. All right, which is the daily. Pound's actually lower. Let's get a little bit more granular with this here. Okay, you can see we've got a little bit of a sell-off here, but we're bouncing back here with the pound. They had their CPI data came in just a little bit lower than expected. All right, they were expecting 5.1%. Last month's year-over-year was 5.2%. It actually came in at 5%, so it's a little bit lower. Although it looks like the core CPI number was higher at 3.4%. So it's interesting what's going on there. Let's see, retail price index came in just slightly below targets here by about 1/10%. So it looks like the inflation is starting to cool there in the UK, but you know what? It's still pretty high. I mean, we talk about 5% inflation. That's very, very high actually, and considering that their target for the B of E is 2%. This is way outside of that band. So tomorrow we're going to get the actual B of E inflation report coming out, and that's going to give us a better idea of what's happening over there in the UK and what they're going to do. But let's just recall that recently they expanded their asset purchase program, so they're not going to be tightening anytime soon. Let's look at that. So Aussie, here we go. We've got Aussie selling off here a little bit, getting a little bit of a bounce here. The RBA minutes came in, and essentially it showed that it was this crisis in Europe which caused them to cut rates at the last time around, and that's really what the market's going to be hinging on for the Aussie, because right now, it looks like the global growth is slowing a little bit, although signs are picking up here in the U.S. But one of the things that we need to be concerned about is if the euro debt crisis accelerates, that's going to cause the RBA to potentially lower rates. So, we'll see that Aussie potentially still coming lower if that action continues. Let's take a look at dollar yen, just see where that's at. All right, looks like we're settling in, just around this 76, just under 77 level. All right, and we know about where we were for the intervention. Let's just take a look at that. Okay, you can see back down here, all right, right just under 76. So, we've given back a lot of these dollar gains versus yen off the intervention. It's going to be interesting to see how committed the finance ministry in Japan is, and if the Bank of Japan is going to get in the act too for any sort of intervention. But this looks like on a 4-hour chart, this could be a major, well, I don't even want to call it a bull, a bull flag, but we could see a bounce off of here somewhere. I doubt they would let it get this low again, but you never know. So that's something interesting that we're going to have to keep an eye on. And then lastly, let's just go back to euro because we're going to use it as a proxy for the dollar. But later this morning, we have U.S. advanced retail sales figures due out and PPI numbers. And that's going to be something big. The retail sales, I think, are going to be important because we're expecting a gain of 0.3%, and if we can exceed that, that's pretty low. That's a good sign that the economy's starting to come back a little bit. Consumer spending, obviously, we know makes up roughly 70% of GDP, so we want to see those sales numbers getting higher. All right, but we're also seeing that PPI numbers are coming in, and producer prices on the headline numbers expected to come in at 6.3%, and ex-food and energy at 2.9%. So we're going to have to see what's happening there as far as prices go. But it's one of these things where we're starting to see the inflation creep up. If you take a look at oil, oil's up just around $100 a barrel, although selling off with this morning's risk aversion. Stock markets are down, as you can see and probably tell by the euro's action. All right, we've got Dow futures down 100 to start the morning, and markets are in a little bit of risk aversion mode due to this euro debt deal and the rising bond yields over there. So that's really what we're looking at here today. But to be honest with you, with the yields rising in Europe, I mean, it's the kind of thing where it's you don't want to see an upward trajectory going to the moon on these things, and if they can come out with the ECB and say something. I realize Draghi's just pretty new there, and they're getting these new governments installed, but they're going to need to stem that crisis. But something like U.S. advanced retail sales, if this comes in and has a good number, okay, we could potentially see a turnaround. So maybe we get a bounce here just ahead of this 135 area support, all right, and we can sort of get back to trading this range area that's out there. And if we look at this on the daily chart, okay, you can just see here that I'm just going to do a quick Fibo and see if we have anything here. Okay, you can see that, sorry, this is going to be a rough draw. Okay, you can see that we just came down right about to the 61.8 retracement level, and we just sort of held up there. So we're going to watch this 135 level on the euro, and that's really it. So I'm waiting for advanced retail sales and the PPI this morning. Also, Empire Manufacturing coming out. Not as important, but the advanced retail sales is really going to be the big number this morning. So keep an eye on that. Potentially we'll get a market reversal. If we don't, oops, look out. Could be some more selling. So that's what I've got for today, gang. Good trading to all.